Have you ever wondered why some stocks seem to bounce back no matter what the market throws at them? Today we're talking about HIMS Q4, and honestly, it's not bad at all. Not a bad 2025 either. I know a lot of people were hoping for a sub $10 stock in after-hours trading. Well, it wouldn't be past HIMS to do that. Who knows what they're going to say on the earnings call? Personally, this is a long-term hold for me. I'm not really worried about short-term fluctuations, but right now the stock is holding up pretty well, so sorry bears. This company, in my view, is doing quite well. Of course, we've had the GLP-1 story hanging over the stock, and that's been an overhang for 7 or 8 months now. But when you look at the actual numbers, you wouldn't see this as a catastrophe. FY 2025 was up 59% year over year. If you compare Q4 2024, when GLP-1 was in full swing, to Q4 2025, after it seems they lost some GLP business, the growth was still 28% year over year. That's still very good for the quarter. I like it a lot. When it comes to adjusted EBITDA, HIMS is doing really well. They are growing adjusted EBITDA a lot. The number of subscribers is growing as well. We are at 2.5 million plus 40,000 quarter over quarter, so growth is still strong, and average revenue per user is $83. I remember covering this stock years ago when RPU was $50 per month. Now the subscription average is $83 a month. This stock, to me, is firing on all cylinders. Subscriber growth is impressive. 282,000 subscribers added from 2024 to 2025, and revenue growth, as I mentioned, is 59%. There's a chart in the presentation I've never seen before showing their 5-year growth rate for subscribers, both new and repeat. They are both growing at 70% CAGR, meaning once a customer is with HIMS, they tend to stay. That's because it's a subscription model, and the subscription includes doctor follow-ups, which is one of the big selling points of HIMS I've been talking about a lot. Operating expenses are another area where I'm very pleased. HIMS has been reducing expenses year after year, including marketing. Marketing spend dropped from 45% to 38% of revenue, and for the full year 2025, it's 39% of revenue. Keep in mind, this is a company with a 72% gross margin. If you ask yourself what would happen if they stopped spending on marketing, the churn would probably be pretty low, and actual profit margins or cash flow could be insane. Back in 2023, there was a lot of FUD. People were calling HIMS just a marketing company, saying if they stop spending on marketing, they're in trouble. But you can see they've improved marketing efficiency significantly. In 2022, to get $23 in revenue, they had to spend $39. Today, to get $190 in revenue, they only need to spend $22. That's a huge improvement. Paid marketing is a one-time, upfront expense, but customers can stick around for 5 to 10 years. So this investment makes perfect sense. The payback period is under 1 year, based on their capital allocation framework. And honestly, 100% ROI in a year on marketing spend? That's not something you see often in the market, but HIMS is doing it. I always care about adjusted EBITDA, and here we see 14%, $318 million. That's a lot for a company that is dirt cheap. Market cap is roughly $3.5 billion, with EBITDA growing 59% in the last year. There is a major dislocation in the stock price. The more mature HIMS business grew 25%, and HERS grew 100%, making it the fastest growing part of the business. HERS makes sense. They launched products for anxiety, menopause, and GLP-1, all contributing to strong growth. Andrew Dudum, the CEO, also addressed how the market pigeonholes HIMS. First, it was just a hair loss company. Then it was an ED company. People said it was just a marketing company. Then came GLP-1, and suddenly that was the narrative, even though GLP-1 is only a fraction of the business. HIMS is much more holistic than that. It's part of the new era of consumer healthcare, and they use AI to refine and personalize treatments. With 2.5 million customers in their database, HIMS can train recommender systems to deliver better outcomes and even develop new drugs. HIMS is vertically integrated, meaning they own the entire value chain, making the peptides, delivering prescriptions, handling pharmacy operations, branding, everything. Unlike traditional healthcare, where doctors, pharmacies, PBMs, insurers, and pharma all take their own margins, HIMS captures the full value. This integration plus AI is a huge competitive advantage. Labs are another major initiative. They priced labs low to attract people at the top of the funnel. 70% of lab takers were eligible for one of their treatment plans. Testosterone and HRT treatments, which require labs and doctor follow-ups, are doing very well. HIMS also held 52% of total sector sales, even with competitors like Roe growing quickly. Roman grew faster percentage-wise, but started from a smaller base. International expansion is also on the radar. CEO Dudum said going global will be a meaningful source of growth. Guidance is important. The 2030 guidance for $6.5 billion in sales hasn't changed, which is reassuring for long-term investors. The 2026 guidance is between 15 to 24% growth, and the letter calls it conservative. I personally modeled 25% revenue growth for the next 12 months, mainly because the forecast excludes Eucalyptus, a $450 million ARR business expected to close in mid-2026. By then, ARR could reach $600 to $700 million, adding more upside. HIMS has historically updated guidance upward multiple times, so it could happen again this year. As for risks, the Novo lawsuit doesn't concern me. Any fine probably won't hit before 2030, and appeals could extend resolution to 2031. The company is facing negative narratives, but so are other growth companies. CLA, Golingo, and Pagaya have seen catastrophic stock declines recently, despite solid fundamentals. HIMS, in comparison, is performing well. Q4 earnings were not bad at all, even with negative sentiment. Subscriber growth is strong, revenue growth is impressive, adjusted EBITDA is solid, marketing efficiency is excellent, and vertical integration plus AI adoption is giving them a competitive edge. With solid guidance and upcoming acquisitions, HIMS remains a leader in next-generation consumer health. For long-term investors, this is a stock to hold. For short-term traders, the stock is undervalued and has potential upside. Disclaimer: this video is for educational and informational purposes only. It is not financial advice, and I am not a financial advisor. Always do your own research and consult with a professional before making investment decisions.